Welcome, everyone. Welcome, welcome, welcome. I hope you are having an exceptional day. How are you, Eunice?
I am doing very well. How are you?
I'm doing very well as well. And, for today, I also want to start off our sessions going forward, and you can keep me honest on this with sharing an affirmation, right? As a
Mhm.
coach, one of the things that I often have with my clients is preventing that negative self talk from taking over your mind space. And because when negative self talk is is consuming your mind space, that means that you cannot be centered and focused on the goals that you've set for yourself. Does that make sense?
Makes sense.
So,
What do
the
you have for us?
affirmation that I want to share today is you can repeat this as I am repeating this. You could say, I am enough. I have enough, right? But I would send that to you and to the universe by saying, you are enough. You have enough. And the reason why I share this affirmation is it will increase your confidence and counter feelings of inadequacy or self doubt, right? The second part, it helps put you in a mindset of abundance rather than scarcity. So I want to, I'm on my own trip. I'm trying to get better for my coaching clients at the same time. So I just wanted to put that into the universe. So thank you for giving me the opportunity to share that with our audience.
That's good. One of those things that even as a business owner that you need is to have those affirmations as well because business can get, you know, challenging. We face so many obstacles. So you need to have the correct mindset to be able to approach any day and come out victorious. So I like that. That's good.
No, I like it as well. I want to, use positive intelligence to be spending 75% of my time in a positive space.
That's correct. I agree. I agree.
All right. Thank you for agreeing. Now, today's topic is, which you are the resident expert, tax free retirement and capital access, the dual power of whole life insurance policies. And,
Mhm.
when I look at this, there are many different vehicles that we could use, right? And life insurance is just one of those vehicles. But I believe it is short sighted and myopic to think that life insurance is there just for life insurance. That this is not a sexy conversation that we would want to have with the audience if we were just talking about life insurance, right?
Mhm.
But what we could communicate to our audience is that life insurance could actually be a strategic pillar in one's life, in one's business, right? Because there are some tax free components that you could actually use when it comes to a life insurance policy, right? And one of the, I noticed that this was a way that the very wealthy, the uber wealthy actually use not only their assets, they use their assets to buy more assets, right?
Yeah.
But what we are actually going to talk about today is how they can use their insurance policy as an asset to go and purchase other assets at the same time. And what really made me see the value of this is the fact that when Elon Musk went to go and purchase what was formerly known as Twitter, he actually used bank financing. But when it comes to bank financing, they always want you to put something down as collateral. And what he put down as collateral was his Twitter shares. No, he used his Tesla shares as collateral, right,
Mm.
to purchase the company. And I thought, well, I asked myself because I'm thinking from the mindset that I had at the time was that why didn't he sell his shares? Right? But if he had sold his shares, he would have probably encountered a 15% capital gains tax, right? So he would have encountered a 15% capital gains tax. Whereas if you have the type of resources that he has, you're probably going to pay no more than 5 or 6% interest on the loans that he took out because they were collateralized at the same time. Does that make sense?
Makes sense. And I think just before we even start, for in case we have any new listeners on our show today, I'm just going to walk through very quickly what whole life insurance is. A whole life insurance policy basically is a policy that allows you to enjoy two benefits. It's an insurance policy and it allows you to have a death benefit. A lot of us, especially if you are a business owner or you are a parent or you have any other people who are dependent on you, typically you would want to have some type of insurance to make sure that when you pass, your beneficiaries can get some type of financial assistance, can get some funds that can help them navigate life without you and without the income or whatever you were bringing to the table. So when you are in a position where you can leave something like that for your beneficiaries, that helps a lot in terms of reducing the stress of figuring things out as well as grieving. So, your whole life insurance policy will give you a death benefit. But not only that, it also has a living benefit. A living benefit in the sense that this is something that you enjoy right now today as you are alive. You don't have to pass on, you don't have to die first for you to enjoy that benefit. Now, this is one of the most distinguishing factors about whole life insurance versus term life insurance, where a lot of people say they are more comfortable with having a policy like a whole life insurance because they know that they can enjoy those two benefits. They know that when they pass, their families are going to get some money from the policy. And they know that as of today, if they needed access to funds, they also have access to those funds. Now, those funds is why we are what we are talking about here today, that you as you have as the policy has access to those funds can afford you a level of tax-free retirement and access to capital, whether it's capital for your business or whether it's just a policy loan that you may need to pay for your child's education or to go and buy more assets so that you can grow your wealth. That is capital that you have access to. Anything else that you want to add from that?
No, that is a good point and leads us right into the first topic that we wanted to cover is the
Yes.
tax advantage growth, how a whole life policy could be used for tax advantage growth as well as retirement income. And to
So as
set that up, let hold on one second. The
Mhm.
key point that we want to uncover here is that whole life insurance has cash value component that grows tax deferred and can be accessed through tax free policy loans,
Yes.
right?
Hmm.
But what is the biggest contrast that you have with that, right? the biggest contrast that you have with that is when you compare. Well, let me take a step back, right? When we were having a part of this conversation before, you had mentioned that having a policy is not an investment. You said something along those lines? Is that the way to see it? Because I think when most people are having this conversation, they want to compare a policy versus an investment, like if they were buying a mutual fund or something like that.
When you think about it, I mean, an investment says I am putting in 500 and I'm expecting a certain rate of um, return, right?
Hmm.
And that's not necessarily how a whole life policy has been created. Insurance
Hmm.
policies are not created to serve as an investment where you say, I'm putting in X, and because I'm putting in X, my rate of return is going to be Y. However, you can use your cash or you can use the funds that are within that policy to make investments.
Hmm.
And from those investments, then you can, yes, see how is this investment performing versus how much I've put in. You can have access to that cash and use that cash, but you cannot call the entire policy an investment.
Hmm.
That's the
Got it.
distinction there. Yeah.
Well, if we're going to spend a little bit of time on this conversation, right? There are traditional retirement vehicles, right?
Mhm.
And let's use the two that are most ubiquitous, is the word that I'm going to use, a 401k. And I think what you started by saying is that you could actually get a life insurance policy and then take a policy loan against that policy and then use that to make investments in stocks, mutual funds, derivatives, or whatever it is, right? So,
Mhm.
would you advise on that, or how does that work?
I mean, every person, every individual is going to be different. What's important is what I think is important to note here, especially when we are talking retirement, is that every person has to gauge what works for them. I've had people say, well, I have a 401k. Do I really need to have something like this because I will be withdrawing money from my 401k, right? I've also had other conversations where people say, I have this policy and I'm interested in growing my real estate and in using some of those funds maybe as down payments for me to get residential properties and rent them out. There is no strategy that is not, every strategy is going to be really dependent on you as an individual. But here's what I will say as it relates to your 401k. When you gauge or when you compare or when you look at all these, you have your 401k, which has an IRS contribution limit. So, how much you put into it, you have a limit to that.
Mm,
As it relates to your policy, we structure your policy according to what you are capable of. So I'm not going to limit you and say because your salary is this, then you can only contribute 5,000 towards your towards the policy. So we can go as high as you want or as low as you are comfortable. That's one of the things that a lot of times people look at. There is no minimum distribution that needs to be met. So with 401k, they are you right now in your 50s, you're not able to tap into that without
mm,
all the fees and things of that sort. However, with your policy, there's no restriction like that. You can still access those funds even before you reach your retirement years. And one of the other things that I really think about when it comes to withdrawing from your 401k is that at that point when you are withdrawing, you are going to be get taxed depending on what your tax bracket, or right, you do get that. And the difference is that when you have your 41 sorry your policy, as long as you are taking out policy loans, you will not be taxed on that. It's a loan. You don't get taxed on a loan when you're taking
Mm.
that loan. And lastly, one of the other things that you may want to consider is that as it relates to your 401k, is that with a 401k, you I my thoughts process just it just blanked I just blanked out. So go ahead. We can talk about the other aspects. I'll probably think
Well,
about it as
when
I'm
you think about a 401k, right?
mm,
It's a near term decision, right? You're not paying any taxes on that income today.
yeah.
The one setup is that when you do retire or you reach 59 and a half, right? That's when you're going to have to pay income tax on that money. Now, if I were advising people around what they should do when it comes to their 401ks, is I would advise them to retire and not touch their 401k for like 2 or 3 years so that they could lower their income, right? They could lower their income and have that to be taxed at a lower level, right? Because if you're not bringing in any income or you're only bringing in your social security or whatever other benefits are there, that's probably going to have you at a lower tax rate as a whole, right?
Mm-hmm.
And I think you touched on
Also,
this. Go
yes,
ahead.
I just remember this. Also, your growth in your 401k typically is tied to the markets. So if the markets are not doing so great, I remember there was a time, even for us, even though, we are not yet at retirement age, but we do look at to see the performance. And we were looking at it and we were seeing the market is not so great. And we could see all the losses that our accounts were hitting. And in that instance, right, if you're already retired and you are already withdrawing funds from your retirement fund, that means that on that year or on during that period when the markets are not doing so great and you've incurred certain losses, once you withdraw money because you are retired and you need that money, that's what you're using for your living, that means that you've already taken that out. You can't say, well, I need to put this money back in so that it can grow as the market changes.
Yeah.
Now, with your policy, you really don't have to worry about that, right? So, as you have these funds or as you have this cash component in your policy, when the markets are like that, what you can do is you can take money as a from your policy as a loan and use that for your living instead of drawing from your 401k. That way you can give your 401k hopefully the time to be able for the markets to sort of correct and gain all that money back.
No, that's also there. And I was going to say, people might look at the opportunity to invest in a Roth IRA, but like other things, you can't touch a Roth IRA until 59 and a half, just the same, similar to your 401k. Now, when you put
Yeah.
money into a Roth, it's going in with tax money. So when you withdraw it, yes, with the Roth IRA, there is not going to be a tax consequence there, right?
Mhm. Mhm.
But you can't touch it until 59 and a half. And I would say that a benefit to using a whole life insurance policy is that you can literally touch the money that you've seeded the policy with almost instantly. So now you put $50,000 in, and let's just say a couple of months from now, you can probably take 25, 30, $40,000 out at the same time. there are no restrictions on how you can get back access to that money. And now you can then use that money to invest in a second place. And if you're doing this pretty well, then that means that you're going to be able to grow that wealth in two places, and it almost could be like an infinite return, right?
Hmm. That's right.
But
That's right.
also, when it comes to 401ks, right? Once you reach 73 years old, now you are mandated through required minimum distributions to take out that money, right?
Hmm.
So even if you don't need the money, you are going to be required to have a minimum distribution from 73 on, right? Whereas with an insurance policy, that can basically continue to stay invested and grow until you pass on and you bequeath that to your heirs.
Yep.
So
I
I
agree.
think we just touched on one particular point. I know we used up a lot of time when it comes to that one particular point, but when you think about it, that is the biggest bang for your buck over there, right? Like the whole concept came to me when we had to purchase a vehicle, and I was like a little bit bummed because we paid for that vehicle cash, but now in paying for that vehicle cash, that means that that money could not be invested. If I had known then what I know now, and I would have invested that money into a policy loan and then used the policy loan to purchase the vehicle.
That's right.
That way, I would have been able to have that policy. I would have been able to grow that money, and I would have been able to have the vehicle at the same time. It's like a win-win-win type of scenario. Let's move on to
Yep.
topic number two: liquidity and access to capital. Why you are live. And the key point that I hope that we can get across here is that whole life is not money locked away, it is actually a living asset. Eunice, what would you add to our audience about the liquidity and capital access components of a whole life policy?
Yes, like you said, it this money is not locked away. You have access to these funds today as you are still alive. It's very easy to even gain access to these funds. You will not be asked to, your credit will not be ran. You will not be asked how and when are you going to make payments. So it's accessible. It's very accessible. As policyholders, you can literally fill out the forms that you are required to do, and depending also on the insurance provider, most within 2 to 3 days you would have all your funds that you have requested for. So this really is a game changer in the sense that you have access to your funds as quickly as possible. And not only that, depending also on who your insurance provider is, if depending on who your insurance provider is, you have the potential also to continue growing even though you have pulled money out. And what I mean by that is, if we take a typical example of a bank, when I walk into a bank and I have savings account in there, let's say I have 10,000 in there. If I decide to withdraw 3,000, the interest going forward is going to be based off of 7,000, not the original 10,000 because I withdrew 3. However, when as it relates to your policy, if you have access to funds of the same amount, 10,000, and you took a policy loan of 3,000, your dividend is still going to be based off of 10,000. Tell me
Hmm.
anywhere else where you have that uninterrupted compounding effect. I don't know anywhere else. So there is a lot of potential in terms of getting access to those funds and also growth at the same time.
Well, I could tell you there aren't any. And I would ask for our audience, because we're not arbiters of all things the
Yeah,
truth, right?
yeah.
I would ask our audience that if they were able to if they were able to find an alternative to this, right? We are asking for our audience to please share with us that other vehicle that they have encountered or they have found that allows for them to grow money in two places
At the
at the
same
same
time.
time.
Yep, that's right.
I haven't been able to figure it out, and if they have been able to figure it out, guess what? I'm happy to be all ears, and I'm happy to learn from them and their successes and continue to help others on their journey, right? We're also
Yep,
we're practitioners, right? But we are also students of the game at the same time,
yep, yep.
right? So
Mm-hmm.
I think if we were to summarize that, what we tried to do in this particular segment was show policyholders how they can borrow against their cash value at any time for business opportunities, for emergencies, as well as for additional investments, right?
Mm-hmm.
But also with what is it, with non-direct recognition, we were able to also highlight the concept of uninterrupted compounding, right? Your cash continues to grow even when you borrow against it.
Yes.
And last but not least, right, what we have been communicating ad nauseum, time and again, and sometimes you have to say things several times before it actually gets through, is through a whole life insurance policy, you are positioning yourself as an alternative as well as in support of bank loans, credit
Yep.
cards, SBA funding. But when you have the policy, you can get access to capital without having to run through credit checks or
Mm-hmm.
approvals.
Yes.
Are we ready to close off that topic?
Yeah, ready when you are. I'm ready.
All right. Last but not least, the topic that we will quickly run through is when you are being strategic and you are actually thinking about your legacy, right? Life insurance policies are strategic wealth transfer vehicles, right? But also they can ensure business continuity. As you mentioned at the top of the call, there are unexpected things that happen in life, right? And if you
Mm-hmm.
are a business owner and you are, for whatever reason, removed from the picture, there's two things that I believe that you would want to protect. One, you would want to protect your family, right? You would want to
Yeah.
protect your family. And not only do you want to protect your family, you want to protect your family's lifestyle,
Yeah.
right? And two, because one of the things that we can do, one of the things that we can say, right, because we've worked in corporate as well as we have been entrepreneurs and building our own business, is that if we should be removed from the picture, right, we would want our business to carry on without
Continue.
us. There is some value to there is plenty of value to the business, and you will want that to continue carrying on. Eunice, what would you add to that?
Yeah, not much. I mean, I think with a policy like this, there is a lot of opportunity for you to strategically transfer your wealth. Even from a home perspective or from a family perspective, you are able to transfer all this wealth through your policy. There is no reason why, as a business owner, you would not look into having a policy to make sure that you or any other key person in the business are insured, to make sure that if that key person is no longer there, that the business operation or the business income does not dry off because now you don't have that person contributing to the business. So your insurance policy helps you in instances like that to ensure that the business can still continue even when it's hit with something like a death, right? So you have to think about the ongoing process of the business to say, even when I'm no longer there, is my plan or my succession plan to ensure that the business still has an opportunity to grow and continue even after that. And your insurance policy is one of the ways in which you can ensure that that happens.
No, that makes sense. So I think we've covered so many portions
Yeah.
of this topic because we touched on legacy planning. We discussed how you can leverage this as with respect to your buy sell agreements. We also talked about key person insurance for the business owners as well as the executives who are critical to the function of the business, right?
Mhm.
But now we are also talking about this because in real estate circles and other entrepreneurial circles, we're also having that conversation about generational wealth, right? And insurance is a vehicle that can be used to transfer wealth while also preserving other assets, right?
Mhm. Mhm.
But the last thing, because we did this as a comparison to 401ks, we did this as a comparison to IRAs, whether traditional or self-directed, right? But 401ks, IRAs that are invested in the equity markets have two things, right? They are volatile, right?
Yeah. Mhm.
Whereas with an insurance policy, you get two things that you don't get over there. One is you get predictability, and two is you get a guaranteed death benefit,
Mhm.
right? So even though we have used 401ks and IRAs as a comparison tool, I don't want our audience to mistake that insurance is a replacement for
Mhm.
all investments.
Yep. And that's very important. Please don't go and say Eunice and Lee said I don't need no 401k as long as I have my whole life insurance. That's not what we're saying. No.
Mm, right?
They complement each other. As you are building up your wealth, you are not going to just base it on one thing. You want to have a bucket where you know that when the markets are not doing so great, you don't have to go into your 401k. You can then tap into your policy, right? So have that flexibility. Otherwise, it makes it tough if you have to repent or if you have to depend on just one aspect. But
So,
please, we are not saying one or the other. Don't say
no, not
no.
please. We did not say,
We are not. Yeah.
right? We did not say it is a replacement for
Mm-mm.
all investments. But what we're trying to do is give you a view of setting up your own personal banking system,
Yeah.
right? Because this is the foundation that we believe provides liquidity, it provides certainty, but as we talked about, it is a tax efficient vehicle that can be used for business owners and entrepreneurs as they turn over to the next level. So, Eunice,
Okay.
how would you close us out for today's session? And then I will close us out.
Well, I mean, I think today's session, we really just wanted to explore the world of opportunities that are out there. There is no just one aspect that works for everybody. Everybody's situation is going to be different, but there are options out there. The best way to figure it out or the best way to make that decision is just to get informed. And if you need any further information relating to any of these things, we do have code on the top left, on my top left. I have the code there. Scan it, reach out, let's have a conversation. All right,
Right.
close us out.
So as we get to close us out, right, we're not only basically evangelists for this type of system. We are practitioners in our own remit, and what we are doing is sharing our personal experience
Yeah.
with you. So if today's conversation opened your eyes to what tax-free retirement and accessible capital can really look like, don't just listen. Rather than just listening, I would ask that you take action, right? Because life insurance isn't about insurance. It's really about control, liquidity, and long-term certainty. So as we close
Mhm.
out, if you are a business owner who wants access to capital without begging banks while building tax advantage wealth for your future, we invite you to connect with us. The websites that we have for this particular service is VIP Insures, VIPINSURES.com, right? Or we'll share in our bio a link where you can schedule a strategy call with Eunice, right? So let's see if this approach fits your goals and help you start building a system that works not only for you today, but will also work for you in retirement. And we look forward to having the opportunity to have another conversation with you again next week, right? And then next week, we're going to talk about insurance plus credit, building long term financial safety nets. We kind of sort of talked on that topic today, but we're going to just flip the script just a little bit more when we talk about it next week. We look forward to having you again with us. Until that time comes again, you continue to be safe and stay well.